Hi, everybody. It's Wendy Nystrom, your host with Environmental Social Justice. And today's guest is Mr. Rex Frazier. He is the president at the Personal Insurance Federation of California. Welcome, Rex.
Thank you, Wendy. Thanks for having me.
Of course. And Rex, you and I go back a few years. We've talked insurance quite a bit. Could you please tell people what the Personal Insurance Federation of California is and what you guys do?
You bet. We're an organization in Sacramento of large property casualty insurance companies. So names you would recognize: State Farm, Farmers, Allstate, Liberty Mutual, Progressive, Mercury, Nationwide, Chubb, American Family. So large companies, and we help them. Excuse me, my cat's a little aggressive.
We love kitty cats.
But we help, as an organization, try to take these diehard competitors and get them to sit around a conference table and talk about public policy and governance issues where they can hopefully develop a consensus industry opinion and then weigh in with the legislature or the executive branch, unfortunately, sometimes the courts, and certainly politically.
Not an easy task. I mean, I'm not even gonna try to gloss over that at all. You are dealing with some very complicated individuals and corporations, but talking from the customer side or the insured side, insurance rates continuously go up, specifically in California, primarily due to wildfire. And flood is also an issue because when we have wildfires, it removes the top layer of soil, it removes the brush, and then we get flooding and mudslides. What can we do as individuals to help mitigate wildfire and hopefully address this insurance issue?
Yeah, if I could just take one step back, if that'd be okay, and put things into context. So in the last state climate change assessment, there was an insurance module. First time they'd ever done that when it came to property insurance. And it was a fascinating look into the long-term trends that we had been seeing. And in the prior 10 years, where the study looked at pricing, insurance pricing, specifically property insurance pricing, there hadn't really been a statewide change in average premium.
Yep.
What there was is the insurance industry had started adopting more sophisticated satellite-based imaging technologies to discern high versus low risk. And what the climate change assessment showed is that in urban areas, more concrete areas, the average premium over those 10 years had actually gone down. But in high-risk areas, the average premium had gone up, and they had largely balanced out. And so the theory was that insurance companies are getting more sophisticated as they get more technologically sound risk assessment tools. And there wasn't a change in statewide premium. It was just a reallocation from urban to rural, or certainly suburban, WUI areas, areas where houses connect to burnable things like forest or brush, and certainly rural. And so when you place California's average homeowners insurance premium into a nationwide context, California is not a particularly high cost on average state. Yeah. The average premium in California for homeowners insurance is 1/2 of what it is in Florida, Texas, or Louisiana, where they've already felt the impacts of climate change for a couple decades now because of hurricane risk. Yeah. And it's really been only in the last 5 years that we've gotten a better sense of how climate change is working in California, particularly to change the seasonal rain patterns, where we're getting rain later and later. We can even get the same amount of rain on an annual basis, but it comes in shorter, more concentrated bursts. So in the fall, we have the winds that we all know, Santa Ana winds or Sundowner winds or Diablo winds is what they call them up in Northern California. And it used to be about a month-long period where you would get dry conditions where it hadn't rained for a really long time. You have these winds, you're waiting for the rain to come, but it doesn't. And those are the devastating fire times that used to be known as fire season. Well, we're getting a couple months now. And so there's just a longer overlap between high wind and dry conditions, that we think that's the manifestation of how climate change is operating in California. And you would have to think there's going to be more losses. And the way the pricing system works, because prices are set through a filing with the California Department of Insurance, an insurance company can't just, they're not like a gas station. They can't change their prices when they put a new sign on the corner.
As long as it's admitted paper, not non-admitted paper.
Totally, that's right. So fully licensed companies, and that's all we represent. And they write the vast majority, 98% of the market. But in those circumstances, higher losses then feed into a pricing regulation that leads to higher average premiums. So there's no doubt that after 2017 and 2018, even after the insurance companies received partial payments back from, in the case of utility-driven fires, utilities have to pay back the homeowners insurance companies after the homeowners insurance companies pay to settle claims. Even after getting that money back, which generally is 50 to 60%, so it's not like full reimbursement.
Yeah.
But even after that's included, obviously you have, once in a generation losses for these insurance companies. And in those 2 years, insurers lost 24 years of profit. So very significant losses that then flow into the pricing regulations. So average prices definitely will go up. And the Department of Insurance is going to have a hard struggle because the prices would naturally go up in the higher risk areas, but the department knows that if you make it too high of a price in these high risk areas that generally are lower income, more rural, that there's an issue to deal with there where people won't be able to afford it. But at the same time, there's risk in telling city dwellers, we're going to force you to subsidize people who live in these higher risk areas, and urban people feel like that's not fair. We should be linking the consequences of climate change to a price signal so that people act rationally. So the department is really stuck, I think, trying to figure out how to balance efficiency and equity issues in an era where climate change is finally being felt.
Oh, absolutely. I mean, because my background is in insurance, as you know, and I've often had to explain to people, property insurance for many, many years was in a soft market. And that means that there were a lot of carriers out there offering to cover your property. They were competing against each other, so they made it cheap. So that's what a soft market is. And then all of these catastrophic losses began to happen. So they hardened their market and they started raising rates. And I've had many people in the climate world approach me saying, why can't they just cover it? Just cover the losses. Why are they raising my rates? So we have to constantly remind people that insurance companies are not charitable organizations, but for-profit organizations. And if they're going to consistently lose money, they will either pull out of that market or they will have to raise their prices. And that's just a fact of life.
As you can imagine, I've heard those criticisms too.
Oh yeah, no, and it's a fair argument. People are feeling squeezed, and especially if you can't get insurance, you can't get a mortgage, you can't buy a house. So one of the things that, I went to a wildfire conference recently hosted by After the Fire, which is based in Sonoma, and they talked a lot about mitigation measures such as house hardening, defensive space, meaning cut away all that brush around your house. But also, what I found to be very interesting, they had an indigenous tribe show up and talk about prescribed burns and how important it is to bring that technology back. And I don't know if you have any involvement in that, but it seems to work pretty well. From the photographic evidence I've seen, prescribed burns, when done by trained, responsible people who know what they're doing, works quite well.
You bet. As you can imagine, we've been knee deep in advocating for changes in law up in Sacramento that address the worries about liability for a prescribed burn gone bad.
Yeah,
there is risk, and you want to incentivize this fuel reduction activity, but don't do it in a way that lets people off for bad conduct or irresponsible burns. So that was a debate the last couple of years, and finally, I think the best piece of legislation emerged this year and was signed by Governor Newsom to encourage more prescribed burn. But it was a long time coming, and it's because and I would value your thoughts on this, there there's a deep disconnect within the environmental community as to whether fuels management, which I guess let's just use that term because there's a bunch of, more charitable or less charitable ways of describing that. But where fuels management is controversial. So on the one side, you would have folks like the Sierra Club or John Muir or Center for Biological Diversity. And their view is essentially we can harden our way through any problem. Let's harden the home. Let's figure out community hardening, or whether it's, gigantic community sprinklers in the town square. There's all sorts of arguments there where the argument is, and therefore we don't have to do fuels treatment, whether that means the understory that can lead to these fires that get up into the crown of the trees.
Yeah.
And there's such a deep skepticism about fuels management just being a cover term for wholesale logging and things like that. On the other side, you've got organizations like the Nature Conservancy that have really, they have dived in to fund research and really focus on ecologically sensitive fuels management practices. And they've made the argument, they believe, that fuels mitigation can lead to a long-term reduction in the loss curve for wildfires, bend down the cost curve the way that we, when we were debating the Affordable Care Act way back when, it was all about how do we bend down the cost curve. And it's the same thing here. Yeah. And so ultimately there's been in the last few years sort of a breakthrough in Sacramento where the folks who believe that fuels management is appropriate and can be done in a sensitive manner, they have generally won the day when it comes time to funding. Now, getting those projects actually executed on the ground, obviously that's a tougher thing, because each one of those projects can be challenged locally or in courts or with grassroots action. And so while we heartily believe in the need and utility of home hardening and defensible space and ultimately community hardening, getting there is a way more challenging thing than I think people are really realizing right now.
Community hardening is the absolute way to go, because if it's just one house surrounded by other houses that didn't do anything, it's not going to make any change. But with respect to my opinion on the prescribed burns, highly recommend, just if people check out the nonprofit After the Fire, they have a lot of information. And when I was at that conference, which was a couple of weeks ago in Sonoma, the indigenous people showed up, and I forget their name, and I'm really beating myself up for forgetting this right now. But they had this great photograph of a forest. One third was the trees were thinned. The center was they were thinned. So that's not just cutting everything down, just thinning out the trees in the forest. Thinned and prescribed burn. And the last third was nothing at all. And a wildfire went through. The thinned area alone had some damage. There was some crown fire. This thinned and prescribed burn, very little, nothing. It looked like a healthy forest. It looked great. And where nothing was done, burned to the ground.
Yeah, it's tough. In the last 10 years, well, I've been in this position at Personal Insurance Federation for 18 years. And when I started, the notion that we were talking about ecology or forestry management, that wasn't part of the job description, right? We argued about boring auto insurance issues. But I would say in the last 10 years, we've had to spend so much time trying to understand the science of fuel. And most of the time it's in a wooded setting, but we can't ignore the perils of brush fire as well. You wouldn't think about beach communities, let's say Laguna Beach being a high fire area, but it's an incredibly risky area. And then there's no forest there. It's chaparral and these little oil bushes that go up, like candles. So that's an issue too. But we've really had to start understanding what drives loss. An incredible amount of research has been done. And, today's modern rating for folks definitely includes fuels concentrations around a city. And I think where we struggle, and I wish there was an answer, but the science just doesn't tell us yet, is is there sort of a measurable percent reduction in fuels that we can be confident would lead to a better outcome in a fire that would then lead to lower losses, which then leads to lower premiums that people pay. But right now, there's not a way to guide a community by saying, okay, in this particular area, if you reduce fuels by X%, that will then take you from being a community viewed as high risk and maybe fewer companies willing to work there, and we could get you more companies there. I think that's where we need to go, but the state of the science isn't there yet. Where the science is, and it's been an incredibly productive last 3 or 4 years through the Insurance Institute for Business and Home Safety, IBHS. They're sort of the property insurance equivalent to the Insurance Institute for Highway Safety, the crash test dummy, research that the insurance industry has sponsored for so long. On the property insurance side, there's IBHS, and they do things like build 2 homes right next to each other, one mitigated, one not, and then see which one does a better job. Obviously, the mitigated one does, and they study how it does.
Yeah.
And so this year, IBHS put out a wildfire prepared home research series of papers, and ultimately a system where they outline you have to do these 10 things in order to measurably reduce the risk of loss to your home. And their argument is that embers are tricky, and embers will always find the vulnerable place. So unless you do all 10, it's not really effective. So yeah, you could do 9 out of 10 and feel good, but that ember is still going to find the one way in. So yes, it's great. You've covered your eaves. You've got a great roof. You've got 5 feet of ember resistant zone around your house, your exterior siding 6 inches off the floor. All those things are great, but you didn't put mesh over your attic vent, and then the fire gets in. And so we do have a debate with the Department of Insurance that is really pressing insurers to be more transparent about how these mitigation discounts are going to work, where the department essentially is saying you can do an a la carte menu, and if you do a couple things, you deserve recognition. And so far, the science just doesn't back that up. You have to do all of these things.
Yeah.
So, we've got that debate ongoing. And ultimately, this research will then flow into insurance company filings. And, you make a filing with the Department of Insurance to change your homeowners insurance rates. And typically, it's a 6-month to a year-long debate with the state. So these are cumbersome filings, and they take longer than we would prefer, but they're complicated too. So, what can you do? And if the Department of Insurance insists on pushing a scientific point of view that insurers don't believe, it's just going to bog down the system of adoption even longer, because it's going to prolong the debate. Meanwhile, IBHS has now started trying to figure out a community prepared standard where they can guide communities. And it's unclear what that's going to be. There's a couple of possibilities. One could be, is there a critical mass of wildfire prepared homes that, if all done, then give a community resilience? So X% of the homes in a community are wildfire prepared home. Is that a different community than none of them? So they're looking at that. The other, another one is, can we come up with a metric for fuels reduction around a community? Yeah. And then have urban planners start thinking about basic things like, instead of putting a golf course in the middle of a city, put it on the edge of a city and use that as a natural fire break. Just
brilliant
things like that. So that type of research is underway, and we hope by next year, not to put too much pressure on Roy Wright at IBHS, who would be another good guest for you. He's really talented.
I think he was at that conference after the fire in Sonoma. I mean, IBHS was there, and everything you're talking about, we saw. It was great.
Yeah, he's terrific, and his researchers are terrific. Ann Cope is terrific. So they're trying to figure out this next step. And as this research becomes validated and ultimately trusted by insurers, they'll incorporate this research into their filing, and we'll start seeing mitigation discounts that folks can get. Now, I think the most unfortunate thing is that when we're talking about mitigation discounts, the way the state's rules work. It's a separate process when you're talking about what happens at the homeowner level versus the premium level that a company is allowed to earn on a statewide basis. And this may bore your viewers. I'll try my best to make it snappy. But so the way an insurer operates is they go to the department and they say, well, we anticipate having this many company or this many customers, and we have these expenses. And to operate on a statewide basis, we're going to need just $100 a year. Well, so the way the rules work is when you have to figure out what you need to pay wildfire claims, the state makes you look at the last 20 years of average wildfire losses. So if you've lost $20 million in the last 20 years, the state will let you build in $1 million a year for your wildfire losses. And so they make you look backward for 20 years. Yes. But then what happens if a company wants to go into a higher risk area? They're not allowed to go to the department and say, well, we know we're going to pay more losses. Yeah. So we think our premiums that are permitted should be higher because there's no doubt we're going to pay more losses. And the state rules don't work that way. They say, no, go in there and get really hit hard and have a lot of losses and then come back to us and we'll let you increase your premiums. And not surprisingly, that's not attractive to companies.
Yeah, they're not going to do that.
Yeah. And so we've certainly been urging the state to consider what it already allows in earthquake insurance, where when you sell earthquake insurance, you say, well, these houses are on these different faults. And if we go into an area that has more fault activity, we anticipate more losses. Therefore, let us charge more so that we can service those expected losses. You're already allowed to do that in earthquake insurance. But for some reason, the state is holding on to this looking backward perspective when insurers have models that try to incorporate wind patterns and other climate dimensions. And they're able to say, well, if we're going to go into an area, here's our projected losses. It's going to be higher. We can go in there and serve this needy community, but you have to let us charge appropriately for it. And the state just simply won't. Without much justification other than the typical anti-technology suspicions of it's a black box we don't understand, or it's just going to be used to raise rates. And the answer is no, it would only be used to justify a higher premium level if you're going into a risky area. But it also would lower the premium you can justify if you get out of a risky area. So it aligns the incentives we want, which is to encourage people to go into high risk areas and be able to charge the premium they need. But if they pull out, they get less premium. Whereas right now, when you look backwards, you can pull out of an area. And if you've had a high losses, you can still charge what you want to charge, even though you're making your portfolio less risky. So we just simply don't understand the hesitation when the state at the same time is really pushing on companies to go into higher risk areas. They want to, but the system just simply has the exact opposite incentives for what we need to accomplish that.
Well, as I keep telling people, and I've said to you, sometimes it's not what you want to hear, but it's what you need to hear in order to make proper decisions. And talking about insurance, if you're going to go into a high risk area, premiums will be higher because losses will be higher. We have to start looking forward and using climate maps, not looking backwards at historical data, because climate change has accelerated significantly. Our drought has accelerated significantly, and our fuel has accelerated significantly. 100%. So we need to look forward, not backwards.
Yeah.
And the insurance industry, it's not like they want to pull out. They just have to make a business decision, just like everybody else. No, and I was going to say, in Colorado, they have higher insurance rates than we do right now. Is that correct?
Oh, about 40% higher. Yeah.
Yeah. So it's not gouging California. It's just trying to bring us to where other people are.
That's right. I mean, it's hard. Our average premiums are really middle of the United States on a gross basis before you even take into account our higher cost of living. Yeah. So once you take into account the average incomes here, California is a very low premium state. And that's, you know, on one level, people like that. But the consequence of that is that if prices are too low, then companies won't be able to serve certain areas that people say they want served. And the disconnect is when we talk about, let's say, health insurance. Well, when the health insurance pool says they need to have a 10% increase, nobody bats an eye. The answer is for the state to subsidize our health insurance pool here, and make people's premiums be less, but they don't actually fight the notion that, well, costs are going up and covered California's costs are going up, so premiums should go up. And the equity question the state answers is, let's subsidize that. And that's perfectly fine. But why would it be any different with a pool like fire insurance? Not that we're suggesting that anyone's premiums should be subsidized. To the contrary, our view is our role in society is to signal these risks. Yeah. And insurance is one of the few vehicles for connecting the impacts of climate change with people's pocketbooks in a way that helps them understand the risks that they face. And so on the one hand, people say they want that, but then on the other hand, when it gets expensive, they say, well, why should we do that? Let's push those prices down. Okay, so push those prices down and then limit availability. So it's a push and pull, but the lower we keep premium, the fewer areas insurers will be able to operate in. And then that's going to push people who need to close an escrow or protect their most valuable asset, their home. That's going to give them really a bad option, which is to go to the state's high risk pool of last resort, the FAIR plan, which when people say they can't find insurance, that's never true, because you have a right to fire insurance in California through the FAIR plan. So, but it being a high risk pool of only high risk properties, its average losses are going to be higher. Therefore, its average premiums are going to be higher. So no one should want to go there. And if they have to go there to close an escrow, then they should try to get out of there as soon as they can find a company that will insure them outside the FAIR plan, because it will be cheaper, because the FAIR plan has to be actuarially sound under the statute. Under California law, it has to be actuarially sound pricing. And it's just going to be a high risk pool that's higher. So we're driving far too many people in the FAIR plan with the way we're approaching things now. The FAIR plan's historical resting point has been about 120,000 policies statewide. It's been predominantly Southern California, the 5 large Southern California counties. And over the last 5 years, the policy mix is shifting to the Sierras. It's shifting to these massive wooded wildfire areas. And now it's up to 270,000 policies. So in the last 5 years, it's doubled, more than doubled.
Oh, wow.
So there's too many people. And now as a percentage of all insured structures in California, it's still very small because most people live in cities.
Yeah.
But if you live in a county where insurance is hard to come by, well, that whole county could be the FAIR plan, it's at some point.
Very true.
And we do not want that for these folks. So coming up with a pricing system that incentivizes companies to go into high risk areas rather than running from high risk areas, that's what we have to do. And we're not going to solve our statewide availability issues until we deal with that.
I mean, I personally would like to see more leadership in the state of California have an actual insurance background, so they understood how carriers worked, or even how brokerages worked. And when you talk about the rates and people wanting, if we do this mitigation technique and our rates will go down, I would like to make it very clear to people that if you have someone approaching you saying that if you do these wildfire mitigation risks and they say, I guarantee you your premium will go down, that's a lie. Those are people that are not telling you the truth, because premiums are going up, rates are going up. Your renewal may be higher with a little bit of a discount, but to say that your expiring will be cheaper, or rather your renewal will be cheaper than your expiring, that is just being dishonest to the client. So I do want to make that clear to people that if you do all the mitigation techniques, you will not get a cheaper premium from your expiring premium.
Yeah, I mean, we certainly are encouraging mitigation. Now, it's on us to come up with better science, which we've been scrambling to do that so we can give better guidance to people. That's fully on us, no problem. But bending down the cost curve in a significant way is a very, very long-term effort.
Oh, and the reason I even bring it up is I know some people that work in that mitigation world that are telling clients, if you hire us and we do these things, your rates will go down. And it's not fair.
Yeah, it is. I mean, sometimes I ask myself, why we talk about climate change so much and it's so broadly acknowledged as a factor that's going to be influencing us in California. Why wouldn't we expect more fire losses? Because we're going to have more fires. And we're only building towards the fuel, not away from it. It's so hard to build housing in urban areas just because people like things the way they are. And so it's so much easier for developers to go to counties where county supervisors are really excited about potential new property tax revenue. And so they'll give permits for developments. And so we're just pushing the population further and further outside of major urban areas. We're placing more sources of fuel because when there's a fire and a house is on fire, it becomes fuel for the next house that's going to burn. So we're placing more homes, more valuable property, and ultimately more fuel sources closer to fuels. And we make it more difficult to reduce fuels around those areas because now people are living in trees. They like their trees, and you're going to come along and want to cut those trees or do projects like that they don't want. And so it's very, very difficult to execute things like prescribed burns near population areas. So we're just compounding the problem by building further and further out into fuel, making it less feasible to reduce that fuel. And then we have this fundamental disconnect in the environmental community about the advisability of even reducing fuel. Whereas I think certainly the average homeowners insurer doesn't think that's a debate. The models that insurers use right now look at fuel load around a community. And so that just is the course that homeowners insurers have taken, and environmentalists can have that debate, but that's not a debate in insurance pricing land.
Yeah. No, I mean, it's a complicated discussion. And as you said, the science is getting there. I do think more environmentalists are warming up to the idea of prescribed burns. I think they've seen enough evidence, and we do need to listen to Indigenous people. I like to tell people that we came along, we screwed things up, and now we need to go back and say we're sorry. We're going to do what you guys told us to do that you've been doing for thousands of years. It worked.
I do think there's merit in looking at pre-European contact forest density.
Yeah.
It's nowhere near. It was so much less than what it is now. We have a home in the woods. My wife and I want to retire in the redwoods. And we live in a place where the redwoods are 300 trees per acre, when it should be more like 30 trees per acre. So historical forest density was just a lot lower, where you have more robust growth of fewer magnificent trees, fewer big straws poking into the ground. Now we have a lot of much smaller straws poking into the ground. And these trees aren't growing as resilient as they used to be. So when a fire rips through an area like that, it kills everything, and there's less likelihood of a big tree surviving because there's fewer big trees. We live in an area that had been logged once in Sonoma County. And so now we have 100-year-old trees. And, it's not like going up to Humboldt and seeing one of those magnificent old growth trees. You can see the difference, and you can see how far spread out these big trees are. They weren't on top of each other. You could ride a horse through that area comfortably. Now you can't do that in the kinds of forests we have. So through the last 100 years of however we've managed or mismanaged forest resources, it's nowhere near what it was like hundreds of years ago when nature had a free reign. And now we can't let fires roll through areas now because people will protect their lives and their property. So it is a difference, and we have to adapt. Excuse me.
Yeah, no, adaptation is, if anything, we have to learn to adapt. That's just human nature. But before I let you go, are there any resources that you could recommend to people to look up, viable resources for wildfire mitigation techniques?
You bet. I recommend going to the Insurance Institute for Business and Home Safety, IBHS. and you can do a search for IBHS Wildfire Prepared Home, and they have very viewer-friendly graphics to show you exactly what they recommend. And ultimately, I have to think that insurers are going to adopt this research into their filings. So by next year, there should be insurance companies that have incorporated this data into their practices, and it'll be recognized at the price.
That's fantastic. And, you know, they're a great group. They actually have some great videos on their website as well, showing those two houses side by side with the hardening and non-hardening. And it's pretty magnificent to see the difference.
Totally.
So Rex, thank you so much. We appreciate your time. And, you know, if you have more data that you want to bring our way or want to talk more about insurance, because I am an insurance nerd, please come back. Love to talk to you more about this.
Thank you so much. Thanks for listening to me.
Of course. Anytime, guys. I'm Wendy Nystrom, your host with Environmental Social Justice. We'll see you next time. Take care. Bye.